Hello, my name is Michael Levy. I'm a co-director of the PASS course. The video you're about to watch is an excerpt from a course we developed specifically for Indian and other international CAs who will be writing the CFE in order to obtain their Canadian CPA. The course contains two components. One component is technical instruction. The other component is case writing instruction. This is an exam that is based purely on cases. So in addition to learning your technical, it is absolutely vital to get a good grounding in case writing. The excerpt you're about to watch will give you a good taste for what a CFE case looks like and involves, and it'll also give you an idea of how PASS effectively teaches Indian CAs to write a CFE case successfully. I hope you enjoy this video.
What I would like to do is take up NBID. So you guys have spent 90 minutes reading it. Now I'm going to do something a little different than what we did in the case writing technique session. It allows me to go a little quicker, and you'll be happy because it takes a little less time. Sometimes we take up a case like I did the other day, yesterday, where I go through and I put the whole plan together, and I go paragraph by paragraph, and you see how the plan is developing. Other times, we pull out the required from the case, we figure out what needs to be done, integration, order of attack, and then we look at each individual required. So this allows me to get into more depth in each required, because going through what we did yesterday, when I go through the whole plan, paragraph by paragraph, it takes time. Okay, it just takes a lot of time. So we just mix it up. Like, truthfully, it's not a question of right or wrong. We just mix it up. Sometimes we go paragraph by paragraph, and other times we do the required, okay, just to really have some variety. That's all. Okay, please stop me, everybody, if you have questions or anything as I'm going through this. Okay, let's pull out the requireds. They're all very directed. I think people should have got these. Beginning in the 5th paragraph. Okay, on the first page, the 5th paragraph, Mike would like to address whether there's serious problems with corporate governance demonstrated by the board, which needs to be remedied. Fine. So we've got governance. He wants to know if there's problems, you're going to have to explain the problems and suggest remedies. Okay, we have a governance required. Then we got financial reporting, and we tell you the issue. So the issue is asset retirement obligation. He wants to know if it's correct and whether the amount accrued is sufficient. Okay, so consider the implications, recent developments, and whether the amount is correct, and if and whether the ARO, the accounting, is correct, and the amount accrued is sufficient. So people, everybody should realize we are being unbelievably nice here. Okay, and again, I think it's representative, and that's why we're doing it. But does everybody understand what we did here? We told you two things about the ARO. How to account, I want to know if it's correct, and whether the amount is sufficient. I call that being pretty nice. Okay, like we're really giving you guidance here on what we want you to deal with. Okay, everyone good? All right. Next sentence, he would like to know whether the difficult financial position impacts the financial statements. Okay, fine. Oh, I just kind of put that with number 2. But they're concerned whether or not they can meet their commitments to the Canadian and U.S. customer. Okay, fine. He wants you to determine whether the company will be able to meet its commitments or whether there'll be a shortfall, as well as the amount of the penalty. Okay, that will be incurred by not meeting the U.S. contracts. So I write that down. That's when we're getting into numbers. Before determining this, he'd like to know whether it pays to exceed emission limits. Maybe it's better to exceed them in order to increase capacity and better meet demand, despite the fines. But that'll still minimize the penalties and the fines overall. Okay, that sounds like it's numerical also. Everyone good? All right, now that's our first page, but In the appendices, in appendix number 3, did people see another required here? Look at the highlighted at the bottom. Management would like to know, here comes the required. If the U.S. contracts produce major negative cash flows, okay, as they're very reluctant, they don't want to give them up. And they would only consider giving them up if they had major negative cash flows. Okay. So we add that. I put it in red, as I'm showing you. It came from an appendix. Remember, we said you're going to get most of them in the body before you get to the appendix, but you can still get something from an appendix. Appendix 5, we got tax. Address whether it makes sense not to file a tax return, as well as, so there's 2 things here, as well as any tax ramifications with the loans to the executive. Okay, fine. So we have 2. I put down A and B. All right. So people, you just have to be aware that they can totally ask you a required in the appendices. Okay. Any questions? So I think I have about 6 requireds. Okay. The first one was governance, then we have financial reporting, then we've got these numerical ones, number 3, 4, and 5, which is dealing with cash flows. And then we got 6, we got tax. All right. Any questions or comments so far? Everybody should be picking out all these requireds, people. To me, they're all very directed. If you remember when we did the case writing techniques and I talked about the different types of requireds, these are all explicit. And I said to you at the time, I think yesterday, I said to you they're like 80% or something are explicit. Okay, so this does fall in line with the majority of the requireds. Any cause for concern? Everybody good? Comments? Okay, now, there is a little integration here, pretending that we had just done the whole plan, put it together before we look at the individual requireds. There is a little bit of integration here. Number 3, where you're dealing with this business of can they meet the commitments or whether there'll be a shortfall. That kind of is intertwined with number 4, where you're talking about should I exceed the fossil fuel limits. So it might make sense to do number 4 first. Okay, it might make sense to do. Hold on. It might make sense to do number 4 before we do number 3. A decision whether to exceed capacity impacts the capacity available. So why don't we do number 4 first, whether to exceed the limits, and then we'll see whether we're going to have we'll see the impact on the shortfall. I'm just saying there's a little bit of integration here between the 3rd and the 4th required. Okay. Also, number 3 and number 5. What am I talking about? Well, if you have a shortfall, guess what happens? You get a penalty. But what did I say? This actually, I said exactly this point this morning. I didn't even think of this when I said it. You have a penalty. What do you put the penalty? What does that go into? Somebody tell me. What does that go into? Right. Excellent. Sarah saying cash flow. Very good. That's number 5. So there you got 3 and 5 integrating. Very good. Excellent. Assuming we have a penalty. It affects our cash flow. So that means I would do the cash flow after I would do number 3 and 4. Okay. So 90 minutes, I don't know. I don't know. I mean, I gave you the whole 90 minutes, obviously, to do this. So how much were you writing and what's my breakdown? Again, 25-30% is reading and planning. So I don't know, maybe 25, maybe about 65 minutes for reading, for actually writing. There's your 90 minutes. Okay. Everyone good with that? We always use people, it's really easy. We use the same percentages every single time. Okay, I'm always at 25-30%. All right, let's look, before we get into the details, let's just make sure we know what we're doing. I need a time budget, obviously, for each one. But before I do a time budget, I have to look at what I'm doing in each one. All right, governance. WIR probably would work for governance. Okay, here's WIR. I mean, I don't have the word implication there, but, you know, identify the deficiency, why it is a deficiency. You get into the implication, you get into recommend improvement. There's not tons of issues here. It's all qualitative, definitely strategy and governance. I thought 10, 15 minutes. I mean, they do have a lot of governance issues. Not a lot, but they definitely have some more, sorry, it's not a lot, it's more serious governance issues here. So this was a direct required, I'll say 10 minutes, 15 minutes. Again, people, I don't want to pigeonhole this to the exact number of minutes. I don't want people to be afraid of guessing the wrong, number of minutes. I'm not worried about that. I'm much more worried that you actually do the time budget and you stick to the time budget. That's the key. I'm not so worried you're not going to be in the ballpark. I believe most of the time people are in the ballpark. Whenever I ask these questions in class, I get people answering and they're in the ballpark. I don't usually, at the odd time somebody gives me a number that's a little crazy in left field, but not usually. All right, any questions or comments on this one? You guys good with governance? Okay, financial reporting, closing the plants, we had two issues. The one issue, as somebody already mentioned, we have an ARO. That was explicitly on page 1. Do you guys agree that the hint was pretty strong for a possible going concern problem? Do you guys agree with that? I think so, but I just want to make sure. Did people pick out the going concern problem? I guess that will also answer my question. You could just give me a yes if you picked out the going concern problem, which will give me some comfort that some people actually did this. Okay, I'm getting some yeses. The odd no. Okay. All right, I'm going to show you yes, but not time to address it. Oh, okay, interesting. Okay, that's why we're doing these time budgets. Okay, the truth is the ARO has a lot of depth. I'm going to, don't worry, we're going to get to the going concern, and I'm going to make sure, okay, that you guys now understand the hints. From a time perspective, to address one of the comments here about time, the ARO will take more time. There's no question. The going concern, I do think is important, but it's not that time consuming. So if you did not address it for time, it's kind of a pity. You literally could have addressed it in a few minutes. And that would have been, honestly, that could have got you competent in the guide. You didn't, you're going to see when I show you the guide, you didn't need a lot for going concern. I'm going to explain that more when we get to the going concern. Okay, but it is important, people. It is an important issue. Now, the ARO theme of the day, the ARO had some number crunching. You don't have to answer this one, but I'm hoping how many of you guys attempted to do some number crunching. Everybody should have attempted to recalculate the ARO. So, 10, 15 minutes, but 10 and 5, ARO 10, 5 for going concern. Okay. Most of the time ARO, and you can still play with that. Okay. We're going to have another session in the course dealing with depth in financial accounting. And I'm just going to tell you something now that's going to be consistent. When I get these like 1 or 2 issues, most of the time when there's depth in an issue, you're looking at somewhere between 5 and 10 minutes. And that'll tie in, people, this will come up again, and I forget which day now, I think day 4. This will come up in day 4 of the course when we talk about this technique for financial accounting. You can put this in the back of your mind, okay, but how long these issues take. But in case anyone's wondering, how do I know like 10 minutes an issue? So that's what I'm getting, like 10 or 15. I'm thinking going concern's pretty small, ARO's bigger with some numbers. Yeah, okay, 10, classic 10 minutes, for a major accounting issue. That's how I'm getting at it. Not hard. Do these time budgets. You just have to stick to them. but I need you to do these time budgets. Okay, now I'm going to look at 3 and 4 together because they were totally intertwined. We kind of had 3 requires. Number 1, or A, determine whether commitments can be met with existing capacity. Fine, we have to do a calculation. Then figure out if we got penalties, another calculation. And then the third one was really easy, whether or not it makes sense to exceed the fossil plant limits to reduce a penalty. And that's really easy. And this is kind of combining number 3 and number 4. We'll end up starting with these. Does this make sense? You guys okay with this? So, the competency, don't get hung up on. It actually is management accounting. Okay, fine. A decent amount of work. It's very quantitative, lots of numbers. Okay, you got 2 paragraphs, I think, in Appendix 3 to compute whether the capacity is met and penalties. This might take 15, 20 minutes. It's eating up 2 requireds. It's eating up a bunch of paragraphs from the case. And I'll say 15 minutes if you can do it. I don't think the numbers were so hard. I actually think the next one I'm going to show you is a little harder. I don't think the numbers here were so hard. Our experience has been, we have lots of experience with this where people, wrote it and handed it in like you guys are doing. A lot of people get these numbers. This, by the way, would be a good example of where accuracy might be required a little more because the numbers were not that difficult. The cash flow were harder. But for these, I think you probably would have to be a little more accurate. You can't know for sure. This was a little tougher. Okay, and it was a much smaller cash flow than what we did this morning. You do a 3-year, you could do a 3-year cash flow, okay, but there weren't that many adjustments. Okay, there weren't that many adjustments because there weren't that many changes here between the years, similar to what we had this morning. Totally could have taken that time-saving thing that we did this morning. Okay, it's pretty much all quantitative. Okay, other than the conclusion, whatever. And the cash flow falls under finance. Again, not that it matters so much if it's management accounting or finance, whatever. Okay, finance. But compared to number 3 and number 4, the previous slide, I think this will take a little less time. Maybe even 10 minutes. Much smaller cash flow than what we did this morning. People, what makes a cash flow big or small are the number of adjustments. That's a reality. You just don't have tons here. Okay, and that's what makes it a smaller cash flow. All right, so everyone good with that? Timing and stuff? All right, and the tax, okay, I don't think it's going to take that long. There isn't that much information. Not filing a tax return, okay, that's a little bit generic, dumpy type of stuff. Same thing with the loans executives, 5-10 minutes. The people, you have to address it. You guys know the message from yesterday. Please tell me you did not forget the message from yesterday. You must address all the required. I don't care if it's small. It's obviously going to be a separate AO, a different competency. Okay, so I'm not minimizing it when I say, yeah, okay, it's only 5-10 minutes. I need those 5-10 minutes. That's my point. All right, is everybody good with, at this point, now let's start taking up the requires. Any questions or comments? Everyone good? Okay, here, good. Okay, let's start with the numbers. The theme of the day, let's start with the numbers. Okay, number 3, 4, then we'll do 5. Okay, so what do you have to do here? Calculate, can they meet the demand? If not, do they have a penalty? Okay. It might make sense to start with, is it cheaper to exceed the limit on the fossil plants? Okay, and then compute whether capacity can be met. And if I exceed the limits, that makes a difference on my capacity. So, the answer was relative. This was relatively simple. You didn't even really need a calculation. Okay. The penalties were $1,500 per megawatt for not meeting the U.S. contract. The penalties for exceeding the fossil plant limits were $1,000. What would you rather do? That was literally one of the requirements that people should have addressed. So which one would you rather do? I think I'd rather exceed the fossil plant limits. Cheaper, $1,000 per megawatt. Okay, that's better. Limit the penalty. The 1,500, right, is higher. Okay, so the megawatt limit was 7,000, whatever, and it would make sense. Exceed that, I'd rather pay that. Okay, fine. So then we can perform the calculation to determine, well, do we have enough capacity? I don't know, if we base on, if we exceed the limit, do we have enough capacity? All right, so now doing the numbers, okay, fine. I don't care about this first point. As I said, keep saying to you, it doesn't matter if you feel more comfortable doing the stuff in Excel, doing Excel or the Word, okay, whatever. Okay, even Michael and myself, we have sometimes our styles a little different. The capacity and penalty is pretty straightforward. I don't think you need a lot of shortcuts. All right, for calculating use context, okay, fine. Okay, we'll take a shortcut. All right. So people look at an example and tell me if this looks kind of familiar. I'm hoping a lot of people kind of were pretty good with this. All right. Title. This is an example from a student. Calculation of capacity versus demand, good. Purpose, excellent. To determine if emitters can meet the current energy requirements and the amount of U.S. penalties, beautiful. Could have separated it out, don't have to. Did it in both. Okay, beautiful. Okay, people, it's a very good schedule. First of all, I got my 3 years, perfect. The domestic requirements given 210,000. The U.S. requirements could have shown how it's rising every year from 38 to 42. What was it going up? I think 5% or something. Probably should have shown that just in case you make a mistake. Fine. So we need 148,500. So how much are we at full capacity? Well, we have 7 nuclear plants, and we said the capacity, they were 67% full. So 10,000 divided by 0.67 times 7. Our capacity here is 104, so we're a little short. We're a little short on the nuclear power plants. It's only 104. Okay, the fossil plants, whatever, was 5,000 divided by the 0.7 times 5. So my capacity, same thing, doesn't change every year, is 140,000. Am I short? Yeah, I'm short. Every year I'm short. Going up. Okay, so if I'm short and I breach it, I got to pay how much? Well, I got to pay 1,500. The penalty, right? 1,500 per megawatt. Now look at the assumption, people. Look at the assumption. Make sure everyone is with me here. Look at note number 1. Oops. Okay, look at note number 1. Assume Enbridge would breach the limit on the fossil, okay, on the fossil plant to maximize production. They'll save money, given that the penalty exceeding on the fossil plant is only 1,000 per megawatt, and the penalty for not meeting the U.S. contract is 1,500. Beautiful. Okay, I'm saying you could have done this either in the main body or in the Excel, whatever. Okay. Conclusion, Enbridge does not have the capacity to meet the U.S. requirement. We are going to be short. Therefore, will be significant penalties. Well, does that make sense? 8310 times 1,500. 12,160 times 1,500. These are my significant penalties. All right. Any questions? People, any questions? Does this make sense? Everyone okay? All right. Now, from a candidate, calculation profitability of the U.S. contracts. This one I thought was a little harder because some people, I don't know, there weren't that many adjustments here. So this is it should have done this, by the way, in zeros. The purpose is a nice purpose to determine whether U.S. contracts will incur loss and should be given up. Okay, fine. So should we give up the U.S.? Well, let's see. Our revenue, okay, should have been in 3 zeros, fine. Either put the notes, you can either put to the side or whatever at the bottom, it doesn't really matter. Again, you'll always get credit for it. Okay, so U.S. revenues per the financial statements, I got the 105,000 or whatever, right? That comes right from the financial statements. Reduction from 2019. Okay, and we have a note at the bottom. So how do I get the reduction? What's that reduction? So it's based on the fact that less than 35,000 megawatts will be delivered because of the capacity constraint. So how many are you delivering? 30,190. Okay, and that's because the capacity from my previous slide was 140,000. You have to fulfill the Canadian first. So you got 140,000 capacity, you get rid of the Canadian, and you've got about 30,190 left. Okay, you got about 30,190. So you're short. I'm short almost 5,000. I'm short 35,000 minus 30,000. I'm short 4,810 megawatts. Okay, times $3,000. So I'm losing revenue of the 14,430. People, does that, everybody get that? You fulfill the Canadian first, 110. Unfortunately, I can't fulfill all the US. So my net revenues, my revenues go down. We told you, so that's the revenues. We told you the cost of the energy was 52%. I think energy costs were 52% of sales and fully variable. Okay, so the cost of the energy. And I got integration. Now, people, I'm missing some stuff here. This is not every adjustment. Remember, this is a sample student response. Okay, up at the top here, a sample student response. I am missing stuff, but I put in the shortfall penalty, 12,465. You want to see this? That? Go back to the previous slide. Hello, here you go, 12,465. Okay. So my profit, I'm still making money. I'm still making money. Now, there's integration. And look at my shortcut. People, I did exactly the same thing I did this morning. Did exactly the same thing. The only difference in year 2 and year 3 is the penalty. And you've already done the penalty on the previous slide. Just bump it up. So that's going to reduce profits more because my penalty is increasing. My penalty is going up from 12 to 18, from 18 to 24. So my revenue is going down 31 to 25. But it's still profitable. So look at my conclusion. I'm not giving up that. Why would I give it up? And again, I made a little transposition error here. Okay, fine. All right. People, this was required number 5. This was the cash flow, which we said was mainly quantitative. Obviously, a much shorter cash flow than what we had this morning. By the way, this is literally the 3rd cash flow in the 2 days. You notice every single time the purpose is different. Remember the purpose in ABBA, see if they're profitable. Remember the purpose this morning from the Miller case about repaying the debt, I think this morning. And look at the purpose here. Look how case specific to see whether the contract will lose money and should be given up. People, if you don't believe me that there's a different purpose almost every time for these cash flows, I literally just showed you 3 cash flows with 3 separate purposes. I can't do better than that. Any questions or comments? All right, so this is probably going to be a few AOs. We have our first AO. Again, I don't even care how many it is. I'm just going to show it to you. We have our first AO where were management accounting, analysis of capacity versus demand. Okay, so there we got X's everywhere. We did pretty nicely, and that's where I thought was kind of simple. And people were asking for a bunch of these. We wanted to get, yes, you need 4 reasonably calculated, but we didn't think it was so hard. What I showed you, yes. Did it have a conclusion? Absolutely. And then the impact of exceeding the limit, okay, fine. We did that also, yes. I didn't really have a qualitative discussion. That's a no. Yes, I had a recommendation. I didn't really have any steps to mitigate the penalties. That's a no also. Okay. So how does it play out? Okay. Critical to conclude, ask for explicitly. Okay, fine. You don't have to do a lot. Good idea. Consider it's qualitative. Okay, fine. Do not assume it's implicit. So you always have to have your conclusions. Okay. So I did enough. I didn't do everything. I didn't have the mitigating and stuff like that. I didn't get competence distinction. Who cares? But I did enough. I got my yes on determining capacity. I got my yes on the demand. Yes, I had a conclusion and a recommendation. People think the ancillary notes. Think of those 5 points I had for the ancillary notes. Did I have a purpose? Did I have a conclusion? Did I have a recommendation? Even a little bit of analysis explaining. So I did all of that. Everyone good? Then we put the cash flow into a second one, whether to give up the US contract. So again, I didn't get everything. I forgot the admin fees. I forgot this one. I think there was an environmental penalty. I got the shortfall penalty, but I did enough. I needed 3. I got it exactly. Conclusion, yep. Didn't really have any analysis on the purchasing from another producer, kind of ignored that. Did I have a conclusion? Absolutely. I said, don't give it up. And that was enough to get myself confident. This one was a little more difficult. I mean, you guys tell me. But look, people, there had to be, the required was there. I need an attempt. Like, I need an attempt on this one, even though I know there weren't that many adjustments and I know it was a little more difficult. Oops. Okay. Questions. And this is about 25 minutes. Maybe even 30 minutes when you combine the 2 of them. All right. Any questions or comments? Is everybody okay? Okay. Before we leave the numbers. All right. People, ARO and going concern. Okay. ARO is a big issue. Focus on the ARO. Make maximum use of the facts and numbers. Okay, fine. Okay. Let's first do the ARO. Let's figure out where it was in the case, and then let's do the going concern. Okay. We had it in the required, but I want to show you in the appendix. They tell me that legislation says nuclear plants be decommissioned once operations have ceased. That is telling you we are closing down the operation. That is an asset retirement obligation when you are ceasing something totally. So I knew I have an ARO, but I'm just telling you that that paragraph, that bullet point gives it away anyway. Okay, fine. Now, people, you got to read the next 2 paragraphs and figure out that what they did is not correct. It's not sufficient. It's not correct. All right, what is not correct? They tell you to close down the plants is going to cost $150 million per plant. Okay, Forget about the going concern part. The controller did okay, fine. Is it just being negative cash flow? All right. So look what I wrote down. 5 plants, that's 150 million each plant. That's 750 million liability I want to see on the books. They're closing down 5 plants. I got to provide for that. I have to provide for that. Okay. Then they tell me, watch your dates here. At the end of 2018, for the 12 plants, they said it's going to cost $1 billion. They've been accruing this. And at 2018, we have 500 million sitting on our books. Everyone good? Okay, 500 million. Then they tell me there's new technology and they can reduce the cost by 20%. It's still in development. Okay, fine. That's going to be another issue. You'll see in a second. Okay. The question here is it correct? They reduced the amount by 100 million because of this new change in technology. Okay. I don't know if that's correct. And this resulted, okay, fine. All right. Oh, 1 second. I should have highlighted this, but let me underline it. This resulted in a final balance for the ARO of 420 million. Okay. Let's just look at the income statement for a second. Everybody good? So now look at the income statement. So the income statement, there's my 100 that they're reducing, my 100 million, they're reducing it because of this new technology. And there's my, I guess, annual decommission expense of 20. Okay. All right. Shouldn't be going through the income statement. Should be going through the balance sheet. Fine. Okay. So you should lose the financial statements again. Similar to the point I made yesterday. No, I should not. I do not see financial statements every single time. Okay. So now people look, increase of 100 million. Okay, fine. 420 million. Okay. People look right at the bottom. Can you guys see the bottom here? What's the problem with the accrual for the ARO? Somebody just spell it out to me. We asked you in the required, is it sufficient? What's the problem? And there's more than one way you could have done this, by the way. I just want to make sure that people are cluing into this. I just want someone to articulate the problem. Or write it. Or tell me to unmute your mic and I'll try that. If you'd rather me unmute your microphone. No one's asked me to do that. Okay, I'm just giving you a second, people, if people are writing of anything here. Okay, I'm not getting anything. All right, people, look. It's really 2 paragraphs and 1 sentence that you have to put together. If I have 5, no one's saying anything. Hey, look, if I have 5 plants that I know I'm going to have at 150 million, that alone is 750. How the heck can I have 420 in 2019? And what about the other plants that are not even going to be shut down? I was always providing for them. So you are way too low here. Just the 5 plants you're closing down, you got 750. And what about the rest? So I did a calculation at the bottom. And it's not the only way to do a calculation. And it's showing, you can read you can see the calculation. It's showing that, yeah, I'm way low here. Now, there were different ways to do this. You see, they started at $1 billion for 12 plants. Okay, fine. I don't know. Maybe that was right to begin with. But obviously, it hasn't worked out exactly, because now I'm sitting on my balance sheet with a liability that is way lower. Last year, 500 million. This year, 420. And then in the next breath, you're telling me, no, we got to close 5 plants. Yeah, 750. Really? 750? My liability is sitting at 420. The thing is way too low. And what about the liability for the other plants I'm keeping open? I'm still keeping open 7 plants. Eventually, they have to be decommissioned also. Don't I have to add something in for those plants? Even if you do what I did at the bottom, and it's not that much. So you are under accrued here by hundreds of millions of dollars. Does everybody see that? These are the numbers, people, that you're supposed to be working with. Okay? You got numbers, please use them. All right. Everyone good? Oops. Okay. Everyone okay? All right. Now, the going concern. Look, it's not good enough to simply tell me we have a going concern problem. Okay, that's not good enough. You've got to tell me why. You've got to support the going concern problem. So, look, I mean, there was a number of ways here to support the going concern. That's a big deal. You got to support it. The 150 negative cash flow, okay, that's a huge number. You got 750 million you're going to have to pay because you're decommissioning these 5 plants. That's kind of a lot of money. Okay. The balance sheet. You know what this is going to do to your equity? Make it negative. You're going to make it negative. I know most students wouldn't clue into this, but we told you that the company had assets of whatever, $1,146,000 and liabilities of $856. Okay. I don't know if anyone did this. Did anybody compute the equity, the difference? It's only 290. 290. I've got an accrual of 750. Even if you want to use, again, different numbers here. Okay, here's an adjustment to 533. Goodbye equity. That literally means the company is not solvent. You just wiped out the entire equity of the company. Does everybody see that? You literally are wiping out the equity of this company. I know this is a little harder because we put it kind of in a bullet point. But it is right after, by the way, it is on the same appendix that you're dealing with a whole ARO. Any questions, people? Does this make sense? Okay. So all I wanted for the going concern was a couple of points of support, recognizing, okay, 3 things. Number 1, recognize there is a going concern. Number 2, tell me why. Give me a couple points. And then you might as well give me some implication. Number 3. By implication, I mean, I don't know, tell me what we have to do. We have to disclose it, or maybe we have to use liquidation values, or maybe we should. Now, we gave you a major hint if you didn't see it. Okay, Mike asked about the difficult financial position the company is going to be in, impacting the financial statements. Major hint. Okay? Make sense? All right. Okay, well, let me show you a little write-up. Let me show you a nice little write-up of the financial reporting. Okay? Again, please stop me if you have any questions or comments. Okay, this is written by a student. It's pretty good. Again, that's not the perfect answer. Okay, notice the titles. Everything is good here. Lots of titles. Beautiful. Aro is accrued. EI has accrued an Aro in connection with the decommissioning. Okay, fine. As per the CA handbook, the amount recognized will be based on the best estimate it will cost to settle the obligation of the balance sheet date. Perfectly fine. This is just paraphrased from the handbook. You want to copy and paste, no problem. But the key is you're supposed to set up the ARO at the best estimate. Beautiful. Okay. This is how they typically do these financial accounting. They say met or not met. Have we done this? Best estimate? No, not met. Why? And now you're going to get into the numbers. And even though there's a mistake here, it's still good. The amount of the ARO is insufficient. Why? Because to close down 5 plants is $750 based on 150 times 5. And that exceeds the amount accrued at 2019 of $420 for all 12 plants. Okay, excellent. The ARO is well below the best estimate to settle the present obligation on the balance sheet date. Excellent. Is everybody happy with this? You're doing numbers, you're explaining why the accrual is under. Total obligation. Again, this is not the only way to do it, people. There are other ways. Total obligation would be accrued for all 12 plans as follows. Let's see. 5 are $750. Okay. Plus whatchamacallit, you have to add another you have to add another 245. So where are we getting 245 from? So what this person did, and again, people, there's more than one way. What this person did is they took 420, which is what we had on our books, and they said, okay, fine. If I got 420 and that relates to all 12 plants, okay, I only have 5 left. So within that 420 divided by 12 times 7, I have to add that amount to the 750. So really it's 995. Really it's about another 245,000. Because who says I shouldn't only accrue? People, I shouldn't only accrue. I shouldn't only accrue for the plants I'm decommissioning. I got to accrue for everything. Eventually I'm going to decommission everything. So this is pretty good, messed up a little bit with the 420, the 520, whatever, I don't care. Like overall, this is definitely good enough even with a mistake to get competent. Therefore, I'm under accrued by 995 minus 420, a mere 575. Excellent. Nice title. Make sense? All right. Now, was everyone good with that? That was the bigger issue. There's a smaller issue, and if you didn't remember ARO, you're probably not going to have clued into this, but why were they wrong in changing because of the technology, taking a gain of 100,000? It was 100,000, not 110. Why were they wrong in taking this gain? What was the problem with that? Does anyone know the technical point? Okay, TJ, very good. Uncertainty, excellent. All right, people, look. This is a technical thing. Either you knew this or you didn't. Normally, receivables and payables, I don't need the highest level of certainty, okay? I can go on reasonable. That's the standard. I can set up a receivable if it's reasonable. I can set up a payable if it's reasonable. But there are some exceptions in the handbook, and this is not the only one. There are some exceptions where the handbook is worried that you guys are going to manipulate, that everyone's going to, I'm going to manipulate. The handbook is worried. So what they do is they make the criteria harder. This is an example where they're worried. They're concerned. Nobody likes AROs. An asset retirement obligation is some big amount that sits on your balance sheet as a liability every year. Everybody hates it. Who likes it? Doesn't make your statements look good. Nobody likes it. But everybody would love to reduce it. Who needs another liability, a big one? So what's one way to reduce it? Oh, they're coming out with new technology. Don't worry, you're going to have to spend less. That's a way to reduce it. So along comes a handbook, and the handbook says, you know what? You kind of need sufficient objective evidence. People, that is a higher standard. That is a higher standard, and those are the words in the handbook. That is not just we could take a little estimate. You need some evidence you can reduce it. You just can't walk up to me and say, well, you know, the technology is looking pretty good. What the heck? Let's go and reduce it. So in this case, I'm saying no, they have not met the criteria. Why? Look at the case facts. The new technology, people, this is from the paragraph I showed you before, may reduce the decommissioning. That's what it said. That's not reasonably assured that it will. And we also said the technology is in development, and we had another key word here. I should have asked you guys for these words. They hoped the new technology will be available in the future. You have two killer key words here. As TJ is saying, okay, totally correctly, uncertainty, tremendous uncertainty. This is not sufficient objective evidence. But guess what? You can't reduce it. It's wrong. You got to reverse that reduction. But I want everyone to understand that if this was a normal liability, you'd have a much better argument. You would have a much better argument, people. Again, this is a higher standard sitting in ARO. And again, it's not the only section like this. There are a few sections where, again, they're worried about what people might do to these, I don't know, accruals or whatever. So they throw in a much higher standard. I'm trying to remember one of the other, at the tip of my tongue here. What's the other one? There is another, I don't know if you guys can remember another example in the handbook where they do this. God. I'm losing it. Anyway, on the asset side, it's something on the asset side of the balance sheet. Oh, you know what it is? I think it's what is it? They don't believe there's a residual amount on one of the assets if you sell it, that there's going to be some residual amount unless, and they give certain criteria in the handbook. Okay, I don't remember exactly. Okay, ignore what I'm saying now. But basically, there are a few sections in the handbook where they throw in harder criteria to recognize a lot. Usually it's to recognize a liability or a receivable. And that's what we have here. But I want you guys to understand that in a normal case, you would kind of be able to make a bit of an argument here. It would be a little more debatable. But not when the handbook says I need sufficient objective evidence. That's the whole point. And that's because they're worried about manipulation. So the obligation should not have been reduced. ARO should be increased. And it was reduced through the income statement. So to correct it, do the income statement. Beautiful. Overall, excellent discussion. Going concern. The controller is projecting negative cash flows. Okay, fine, for the next year of 150. This is my support. This is my reason. It calls, I don't know, the company into question whether they can stay afloat. This raises the issue of going concern. Okay, fine. They may not be able to continue. Look, people, there was other points here. There was a whole equity, which was a harder point. Didn't get that here. Still pretty good. I like this one. We should ask management if they have any plans. Excellent. And conclusion, the company may not be able to survive. Accordingly, a note. Beautiful. Now, at least you got some implication of, okay, what's the impact of a going concern? They have to put at least a note in. Could put other stuff here, but at least got something. Well, how long does this take? I said 5 minutes. That's my whole going concern. I wasn't kidding. Okay, I wasn't kidding when I said 5 minutes. But again, people going concern. Everybody with me? 3 things. And by the way, this has come up several times. 3 things. Number 1, a lot of times you have to identify the going concern. So that's part of the challenge. Number 2, you tell me why there's a going concern. You don't just say there's a going concern. You give me support. Pull out facts from the case. And number 3, you tell me the implication on the financial statements. Either disclosure, qualify, fair value, liquidation value, some implication of the factors of going concern. 3 things. Everyone good? Any questions? All right, so we had 1 AO for asset retirement obligation. Okay, fine. I sure did not get everything here, but you know what? I didn't need everything. I did nicely the accrual and stuff. I did get my yes here in the first one. I got 2 discussed. I got it. Look at the X's. And I got it here also. I got 1 discussed about the change in technology. Didn't mention discounting, whatever. Got my yes here. Had conclusions, another 2 yeses. Did a calculation, yes. Definitely walk away with confidence. Everyone good? Okay, definition, fine. Time I get the case facts. Okay, you're okay. Conclusion, definitely on both sub issues. So people, look, you know, just let me mention one thing here. People, you always need conclusions. Remember we talked about they love conclusions? I said yesterday, they love conclusions, every issue. Does everybody realize here we had 2 sub issues in the ARO? 2 separate issues in the ARO. This happens a lot on these cases. Like you could say to me, ARO, it's not 1 issue, it was 2. The calculation of the liability and the reducing it for the technology, which they should not have done. 2 totally separate issues. I call those sub issues, and that's how they're marked. That's how they're marked. And you kind of need both of them to get competent. Okay, everyone good? Numbers, they give them to you, use them, please. And you need to deal with the full, I just said this, we need to deal with the full required. Going concern, put into a separate AO.
We hope you enjoyed watching this excerpt. If you'd be interested in seeing the remainder of this take-up session, as well as many other case writing sessions offered in this course, please feel free to register. If you are not already on our website, to register, please visit our website, passyourcpa.ca. Put your cursor over the CP module courses at the top of the screen, and then click on CP Indian and other international CAs, and you can then register electronically. If you'd like to ask any questions or make any inquiries, if you're living in Canada or anywhere else in the world other than India, please feel free to contact myself, Michael Levy, or my partner, Ira Walfish. We've given you here contact information. As you can see, we're reachable both by phone as well as WhatsApp. We're also reachable through Skype. If you're living in India, please contact our affiliate, Orbit. And again, on this slide, you can see the contact information for Orbit. We look forward to seeing you in the PASS course.